This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
This is Joe Rabil, and as you know, I spend a lot of time on this channel getting people to understand how to trade in multiple time frames. Today, what I want to do is talk about multiple time frame confluence, because I believe there can be a misunderstanding when we're looking at confluence of different time frames. I want to explain how this plays out, and I'm going to use 3 to 4 time frames. Actually, it's going to be 3 time frames: weekly, daily, and hourly, to sort of depict how I would be looking for an earlier entry using the small time frame when we have confluence on the higher time frames. All right, we're going to do this, and what I want to do, just to let you know, if you want to learn some more about some of these techniques, you can start with my book. It's at rabilstockresearch.com/book. Also, if you enjoy this content, please hit the like button and also subscribe. Okay, so I've got symbol QQQ up, monthly, bottom left, weekly, bottom right, and then daily, upper right, hourly, upper left. All right, we're not really going to look at the monthly time frame, but you would recognize what I've been talking about on my Friday video about the S&P is that this has gone a long way without touching the 18-month, right? So we want to be aware of that. It's just not a timing tool, and I want to talk about timing today. All right, so first thing we're going to do is point out that what took place on the weekly chart of the QQQ mirrors very closely to what took place in the S&P. We had an extended run to the upside in a strong bull market where ADX was confirming, and then as we moved into this fourth quarter here, November hit a new high. We got no confirmation on an ADX basis, all right? And then we made a peak in price and a peak in the ADX line, this blue line, which is the difference between the green line and, so how far apart these are is going to determine whether this is rising or not. If this keeps growing and this keeps falling, then this line is going to be rising. This shows the strength of the buyers. This shows the strength of the sellers. What shows here is that we went to a new high, made a pivot high, and that ADX couldn't get above 25 for the first time in this bull market. All right. Now, that's a big warning flare. So what we want to do at this point is be on the lookout for signs of even more weakness. All right. So look at what takes place. We come down, we find support at the 18-week, which is actually parallel to the 40-week. They're rising at about the same rate. All right. And then we make a little run. But if you notice, we made a pivot low here, but MACD could not get above the signal line. And then we pulled back, and then look at what happened. We made a higher low, higher low, higher low. All right. So we had 3 higher lows, and this actually made this bar right here made a marginal new high above this prior peak. So we have a divergent, this is right out of my course. I call this a divergent pinch play. All right. Where we make at a minimum 2 higher lows, right, as we go to a new high, and the MACD cannot even get above the signal line. So to me, this is a pretty nice little timing tool to be on the lookout, especially when the ADX can't get above 25 after confirming for a long way. All right, now, when we know that's in place, we go and look at what takes place on the daily chart. All right, now, look at the way this played out. We had this long consolidation pattern, and then it tried to break out here. But notice what takes place. MACD looks like it's confirming, okay? But look at what's going on the daily chart. We have this extended period of low ADX where the odds of this confirming are very, very small because this is so low. For this to break out and follow through and get this to climb above 25 would be very difficult, all right? And I mentioned this with the S&P in the Friday analysis. So we get this pattern where we have no confirmation on this time frame. Now, yeah, the MACD is turning up at this point, but when we look at it and we look at this from a confluence standpoint, we know there's weakness taking place on the higher time frame. right? We have no strength in ADX, and we also have no strength in ADX here. Now, what we can do on this time frame to sort of confirm that is recognize what's taking place in green DI, because we broke out here. We made a new high above this prior peak. And if you look at green DI here, and then you notice we made lower highs since that point. And as this was climbing up, we could not get this above these prior peaks. So we have no confirmation in green DI. Not only does it not get above its own peaks, it can't get above red either. All right, so we know this. We know that in 2 consecutive time frames, we've got a problem with the momentum of this breakout. The other thing that I would notice as I look at this is that right as we're hitting a new high, look at what the bars look like, right? I mean, these are pretty good looking bars here, these nice green bars, but look at as we get closer to the new high, you see how they get weaker and weaker? We had 3 weak bars in a row and then a fourth here, really. This might look like a, bottoming tail, but in reality, after what's played out here, I call this, just a rally back to the 4. So we come down and then we rally back to the 4. Now, this is made crystal clear when we look at the hourly chart, which is where this drops down, and then that's the rally. And then this is your red bar reversal to start this big red bar here. All right, this daily bar having a really ugly day started in the first hour with this pattern with a pinch play where red is starting to take over again. Okay, making a move and a higher low above the green line as this is pinching to the downside and failing at the 18. Okay, so this to me is the entry bar to get you in on the massive amount of divergence that's taking place and this pinch here. All right, so sometimes what you have to do is skip a time frame. All right, this time frame, if you're just looking at MACD, this is where MACD would have thrown you off, okay? If you were just looking at MACD and you were using MACD by itself without the use and the help of ADX, I think it might have thrown you off and said, hey, I got to watch for a little pullback because I could play a pinch play or something like that for a continuation to the upside. But if you understand what's taking place on this time frame and you recognize that green DI is so weak on both time frames, right, then we know that we can actually be on the lookout for failure here using the small time frame and getting in pretty early. All right, now, if I'm going to play this type of trade, I'm not playing for a big move. I'm not playing for the kill shot. All right, I'm playing for, I'm getting in here, probably using really tight risk. I might give it a little room above this bar, but it's pretty much just there. And you can use the 2 ATR approach if you want. And then I'm gonna look for a run down into support, probably taking off a decent amount by the time I get to this point. Now, you could have a trailer if you wanted, something like that, if you want to do that. But most of the time when I'm playing a reversal pattern that, still has upside trend in place, right? I mean, the weekly isn't an uptrend at this point. When you're putting this trade on, really the daily and the weekly are in uptrends. I'm tending to be a little bit more, prudent about trying to be a hero. I'm trying to take advantage of a market counter move, and I want to keep the risk down, and I want to take advantage of a run, but not overstay my welcome. All right, especially in the environment we've been in with this market where it's had like 9 lives. Every single time it pulls back, there's buyers. In this case, no, there weren't, and it kept dropping. But you don't know that before you start. All right, we knew there was the risk of the start of this type of play where we actually break the 18-week and get into something a little bit more ugly. But again, you don't know that when you're putting the trade on. So you have to have a plan in advance. And I'm just telling you, my plan would be probably taking some off at this prior low and then getting a little bit more aggressive at the next low. And then, if you want to trail the last piece and try and, go for a big win on that piece, that's okay. But you need to have book profits and be at a break even at a minimum. But for the most part, I'm just telling you the way I look at things is I'm not really going for the big win, the big, huge move. Now, I might do that if I do the options in this signal. right? If I put on an option trade here, then I might take profits at the first area and then just see if I have enough time on my option. I might play for a much bigger win because I know that, even if it goes against me or the market gaps up or something like that, I'm not going to lose more than what I put up. So anyway, these are just thoughts. I think these are all helpful things to be on the lookout for, especially when you have this confluence amongst different time frames that might not be as obvious. You need to understand how confluence takes place and use both your indicators, both MACD and ADX, to come up with those decisions. Let me know if you have any questions. Thanks.